week on now, what's your take on whether the Fed handled that well or not last week?
Well, I think if you look at, strictly speaking, the relative health of the economy, the Fed was justified in not beginning tapering, and that's what they've bent over backwards to convey to everybody. But having said that, I do think they missed an opportunity. In other words, they had prepared Wall Street for the beginning of tapering going back all the way to May. Wall Street was prepared for it. And I think they could have initiated a relatively small cutback in the program with very little market movement in reaction, and begun the process of rate normalization. And yet they didn't take that opportunity. So I think that they made a mistake in that respect. And Mr. Fisher of the Fed's been talking about that very position the last few days. I agree with him.
Hello, and welcome in from Sunnyvale, California. I'm Mark Vierra, and I'm going to go through a few of the basic charts levels that most technical traders are paying attention to right now. Just briefly looking over the percentages, I can see September we're up 3.6%. Here's what we're doing for the quarter, and I always, in my log, I'm keeping track of, this is the low from, the various two lows that we put in. If you look back in those dates, and just try to keep track of that stuff. Anyway, starting off with a monthly chart, let's click over to this one. This is what I want to emphasize here. This is call this a green candle bullish. I think it's showing more sign of weakness than anything else. The psychology is the market wants to take out stops before it carries on with its move that it wants to do for that time period. And this upthrust topping tail is a sign of weakness. Okay, that's all on the monthly. Got another trading session before that candle closes. On let's see, the weekly chart, last week we had that upthrust candle, and so consequently we moved down this week. I do believe we're going to go down further, and I'll elaborate on that. So first I want to look at just some moving averages. I've got a retracement from the low to the high of this current leg, and just kind of lining up the Fibonacci retracement with the moving averages. And I'm looking at some topping tail candles on these trading sessions. I think we're just doing a small ABC, if you want to call it, on another move downward towards the 100-day. I think that in this area between the 50 and the 100-day would be a technical level to get possibly long on that. Not putting too much emphasis on moving averages, but just using that as levels. Just take a look at some patterns before I get into volume. Now, this is not a well-defined, it's two-touch bear flag, but you can see we're breaking down out of that. And I'm looking at the previous symmetrical triangle as important levels to keep track of, and I've indicated right here we possibly get support above that, but I really do like the 1675 area would be my choice to initiate a long position. So the only other pattern I want to just point out that I have this in my log, and I'm just more or less looking at this pattern was neckline as an important pivotal point. It's not a very well-defined pattern, and inverted head and shoulders is a pattern you're supposed to find in a downtrend, and I wouldn't call this as more of another small ABC correction in a move upward than a textbook inverted head and shoulders, just throwing it in there, looking at that neckline. In terms of volume, I'm not really, big on the conspiratorial gap theory, but it is a level that traders keep an eye on, and I'm looking at this gap from this date, the 1675, 167.5, as a good level. And let me shrink myself down here. MACD on the daily, this is a 3-month daily, right at the point of control. And this is another pivotal intersection right here where I do think we will break down below that. And I'm looking at the MACD is looking like it's rolling over too, so that's just a few things in the foreground and the background. Now, intraday, I'm seeing there is some positive divergence going on here. So it's really tough to tell, especially you got the end of the month, end of the quarter, and what is institutional, what are they going to do next? So another positive factor too is the space between these playground areas is 70% of the trading that's going on. You can see now it's like it's finding a base level, so that is a positive sign on the intraday. And I'm just going to wrap this up really quick. The $1.35 level on the euro has just been an excellent level for me. Racking up the pips on that one. It's been a good trade, and I'm going to keep at that. I think this daily candle, I'm going to see some more weakness in the euro, and I'll keep at that one. Shorten the euros. So let's see, what else do I want to cover? I think that's about it. You know where you can always find me. I'm hanging out here, HotStockMarket.com. You can visit my trading log, weekly poll. Guess the outcome for the week on the S&P 500, up, flat, or down. Love to see you out there. In any case, that's a wrap. I'll see you guys.